All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to be aware that towards the end of this video, we have a lot to cover about the S&P 500 index, how the 10-year treasury is reacting, and also the outlook. So stay tuned. We're going to look at some different articles and why the stock market rebounded, right, on Friday. Now, we did have hopes of stimulus going into the weekend. The weekend we already saw yesterday that stimulus has been approved, but you still want to be aware of some things here because stimulus could start a small rally, but that will be a temporary effect compared to what's going on in the background with the S&P 500 index and these treasuries. So you definitely want to stay tuned on in for all that information. All I ask in return is for you to smash that like button to let me know you watched this video, you found it helpful and informative, and you found value in what I had stated. So that's all I ask in return, hitting that like button, and you guys will be able to not only just smash that like button to let me know, but more people will find out about the video and receive this insight. So you're not only helping the channel, but you're helping others be aware. So let's see here. NIO, NEO Inc. has actually dropped down to lows here of 31.92, 31.94, give or take, really close to $32. Let's just round that up. That is basically our low right now and the lowest point that we've seen it in this bearish run. We need to watch this carefully, okay? Because yes, this jumped up. We need to see how the market reacts starting this week, especially tomorrow, going into then Tuesday, then Wednesday, and so forth to see how the stock reacts. But you want to keep that in mind. $32 is the lowest point. Now, the second lowest point is our first support level, and that's $32.64. You want to write that down. The closer it gets to $33, then we're not too far away from 32, and then we're not too far away from 32.64. So you want to keep that in mind as well. We're certainly in tug-of-war zone right now. The 50-day moving average is slightly above the price at 38.71. You will want to write that down. It keeps jumping up and down. I can't land exactly on it, but 38.71 is the 50-day moving average. That's what the bulls need to break through to reach newer highs, and then their next resistance level would be up here at this point at 39.52. I do want every single investor and viewer to be aware of that. Now, our current support level, which is slightly below the 50-day moving average, is 38.63. You want to keep that in mind, but the 50-day moving average is truly our resistance level for the bulls to get back into bullish territory, and then they need to continue to pull upwards to reach newer highs. So that would be the resistance level I would refer to, which is the 50-day moving average currently based off of how the chart is looking, and we're in tug-of-war zone. Now, this is a broad stretch from support and resistance. So a midway point I would use is right here at this point at $35.93. And if you want to round it up to $36, you can, to go and see how the stock is reacting, if it's pulling downwards or reaching newer lows, or are the bulls trying to bring this back up and bring it back up to newer highs and new resistance levels. So you definitely want to use that. It's optional. I would use it, but like I said, completely optional. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to smash that like button to let me know you watched this video. Stay tuned till the end because we have a lot to cover about the S&P 500 index, 10-year treasury, and yes, stimulus has been passed, but we want to be aware of all this information that could be going on in the background while the market is pulling itself back up. So stay tuned. We're going to cover about the S&P 500 index. We're going to look at an article talking about what made this run go up, how the S&P 500 index and the other indexes are doing, and the 10-year treasury bond. So stay tuned for all this information. So we have a lot to cover here, and we have the S&P 500 index here in front of us. And what I want us to be aware of is the fact that, yeah, today there was a run. We need to see if this run can hold itself up and how quickly is it going to actually eradicate itself. Because when I look at the chart, I look at it this way. What do I see and what is it showing me and what is it that the chart is sending a message to me about. So the first thing is, I've been looking at the peaks, and every time we hit these peaks, right, we go ahead and dip harder. Now, a lot of investors say that 10% to maybe almost 15% is a correction. 15 to 20 is starting to get closer to a crash, and 20 and beyond, we certainly have hit the crash territory. Now, one thing I do want us to be aware of is we almost hit 4,000. We hit 3,950. So I would go ahead and just round this up to 4,000, and 10% of 4,000 is 400. We are only around 250 right now. Even though we've been going down and up, down and up, down and up, we're still at 250. So I still see room here if we are in the midst of a correction, right? We need to see. Now, the reason why this ran up, which we see here in our articles, is the fact that dip buyers fuel stock rebounds. So that's the first thing. There are people buying the dip, right? Retail investors, institutional investors, and so forth. Now, the second thing I saw was the fact that there was a rise because of the solid jobs report. I've said this in my other video that I posted. I'm really glad to see this because this is showing not just economic growth or anything like that, or possibilities of an economic growth, but our population, right? Our country as a whole. Jobs reports are looking pretty solid, or a little bit better than expected. It's not all about the market. It's not all about us making gains. It's also about our country and our people. So that's cool. Then we also have massive fiscal stimulus and vaccination drives. Those are the two other things driving the market right now, which could be the fiscal stimulus could be a temporary run. Vaccination drives could be temporary as well, just for a few weeks or months. So that's something we need to think about as well. And then we have here our 10-year treasury. So when we go to the 5-day, you could see it here. It's at 1.55. Watch, it's going to spike up. And this is what the article was saying as well. Watch, it only took a few minutes. There you go. There's the jump. So what it was also saying here was, yeah, the dip buyers fuel the stock rebound and treasury stays steady. So when we look at the treasury, right, on the 1 day, it was pretty steady. It was kind of going downwards and hanging out sideways until the last couple hours of the day, which we're going to look at right now. Just pay close attention. There you go. There's the spike. 1.5770 right now. And then we put the 1 month, it's going to spike up higher. So when we look at this, we've been going higher and higher, and this is not going to show its effects yet, probably for the next few days or weeks, or we might see it as early as Monday starting to affect the market if it stays around these levels or actually goes higher. And then the S&P 500 index is going to do what? It's going to actually start to go in a downward direction again. And yes, these jumps here are holding up the market from going in a straight arrow down. But the fact of the matter is that we continue to go in that same direction. And that's what we want to watch for. That's what we need to look for. And that's what we need to be careful about here and not get too excited. Now, if we see some consolidation for a few days or a week, then it's probably something showing strength and saying, hey, this might have been the bottom, and every single dip buyer that fueled up the stock rebound was onto something. But right now, I'd rather be a little bit more hesitant and miss out on catching the dip or catching it rebounding from the dip, and just kind of watch and see if it hangs out in the same area before making any decisions. Now, I do want every single investor and viewer to be aware that if you're a first-time investor or a beginning investor, these type of corrections and crash, they tend to happen in the market. I mean, we went through several of them throughout the year last year, back in September, October. We even went through one in June. Now, the thing about these corrections, quote unquote, that are healthy is because of the fact that when these corrections happen, it allows for bull markets to begin or actually start to stir up to go to newer levels. Now, every single investor before the 2020 market crash had to have diamond hands. That's where that saying comes from, or strong willpower to not sell and quickly, get out, unless, you've been investing since way back here, since 08, and you thought you were going to eradicate all your gains, and you took a small hit there, because from 08 to there, that, everyone's investment mostly would have probably multiplied, anywhere from 3 to 5x on the low end, and on the high end, 5 to 10x or more. So that's probably someone that went ahead and got out. But anyone that was investing here in 2018 and felt that correction and then started to ride that bull run, and then here in 2020 panicked, they learned the behavior. It takes a few years to learn the behavior. So anyone that got in after this dip and you're feeling a little bit worried about this dip, this is where you're supposed to learn, and you're also supposed to think about the stocks that you're in. Do you understand them, and do you see yourself holding them more than a month, more than 6 months, and more than a year? It's very important to understand that about the market. You could do speculative plays. You could do penny stocks if you want to. That's not financial advice. I'm not telling you guys to buy, sell, or hold any type of stock. That's an opinion if you want to go ahead and do that. But you need to have a portfolio as well that gives you a foundational ground to understand what your goal is as an investor long term. So these pullbacks, the one we're going through right now, if you feel like it's a big thing, don't worry about it compared to the long run. I mean, look how many times we've been through small corrections or even a crash, right? Like the one we saw in 2020. So any new investor or beginning investor, this is where you're supposed to learn and not run, okay? Because if you ran back in 08, you would have missed this run. If you would have ran back in 2015 in that dip, you would have missed this run. If you ran in 2018, you would have missed the run from 2019 all the way up to 2020. And if you would have ran from 2020, you would have missed the dip from here to 2021. And I will be saying a story in 2022, 2023, 2024. If you ran from the dip in 2021, you would have missed the bull run for all these last several years. So definitely, that's a message to every learning investor, beginning investor, and even experienced investors that are being a little bit hesitant or being discouraged by the market's movement. This is normal behavior. It's part of the market, but this is why you need to know what stocks you're in and which ones give you the conviction to stay. And this is where you're supposed to get the opportunity to go ahead and load up on more shares the more you can. Now, let's talk about the tweet of the day. So the tweet of the day was, what two catalysts so far in the last week have made the stock market reach these lows we have seen? Do you believe the market will have a slight jump tomorrow or continue its trajectory, how you were supposed to go ahead and pronounce it and write it, but I went ahead and put trajectory and the word tragic in front of Tory. So everyone's looking at it as a tragic pullback. This is not so far anywhere near a crash. We're in a correction. And the two catalysts that have happened so far, and thank you for the one person that went ahead and commented how they felt and what they were stating. But the two catalysts that have happened so far is the fact that the treasury bonds, right, the 10-year treasury and all the other ones, they spiked up pretty fast. And then also the date that Jerome Powell came to speak and try to ease things off, and it did the opposite. But today, we're seeing the effects. I guess everyone slept on it, and they took advantage of the dip, and they bought more shares, and the S&P 500 ran up a little bit. But I do want every single investor and viewer to be aware that we need to watch this carefully. We do, and there is room here, if we're in the midst of a correction, for it to pull back a little bit more. So, what do we do now? Well, my best advice is to pay close attention to the market. Start looking for stocks that you want to learn about or you once wanted and invested in, but it was so overpriced and now it's looking like an opportunity. A stock that was probably at $50 and it's at $20. A stock that was at $30 and it's at $20 or $15, and you have a conviction that it could grow. Look into those stocks. Do your research. This is the time to do research and have all the time in the world to not fear of missing out. And that's one of the best things about pullbacks. Now, hopefully we're not in a crash and we're in a correction, but prepare yourselves. Be prepared and aware. As always, guys, thank you guys so much for watching, and let's make some money.